We need to talk about silver. In today's video, I'm going to highlight why I think that right now with this blow off top that we're seeing in precious metals, especially with silver, the news that came in from China that's going to be imposing licensing requirements for silver exports. I'm going to talk about why I think right now there's way too much euphoria around gold and silver that yes, over time, gold, silver, precious metals in general that are scarce do tend to go up. But I don't think we can justify how quickly and how fast the price action is accelerated for things specifically like silver. So I hope you watch this video through till the end to get your another form of due diligence, if you will, to then make the decision on whether or not you want to buy come market open on Monday. Because if it's for me, I'm going to tell you as to why I think maybe we should wait for a cool off prior to jumping in. But remember, as always, never financial advice. Just trying to put you guys on the plays that I'm in. If you're new around here, smash the like button down below and also consider subscribing to the channel. So let's go ahead and dive right into silver. Silver right now, spot silver, is trading at $79.11 per ounce. It's gone on a parabolic rally throughout 2025. Strongest year in a very long time. If we look at the 5-year chart, you can see where silver lies in the last 5 years, 10 years. You can kind of just look to see from even all-time highs, you can see that silver is gone on a pretty significant rip since 2016, where it was $17.50 an ounce, and today at 79.11. Massive. But what I want to talk about is why I think it's a little too aggressive on how fast the price action has come, and I don't think it's justifiable to buy spot at these levels. So let's make my screen a little smaller so you guys can see everything on screen that's impacting gold or silver pricing. This is from Trade Economics. Silver topped at $76 per ounce during the last trading session for the first time ever, as demand was fueled by escalating geopolitical risks and bets on the US rate cuts. More than a week after President Trump announced a blockade on Venezuelan oil tankers, lingering concerns over political disruptions to global supply have boosted safe haven demand for the metal. The rally has been further reinforced by sustained central bank purchases, steady inflows into exchange-traded products or ETPs, and a series of U.S. Federal Reserve cuts, with markets increasingly pricing an additional easing, quantitative easing that is, from a macro structure in 2026. Lowering interest rates have, of course, enhanced silver's appeal as a non-yielding asset, while policy direction and currency debasement continues to underpin investor demand. Year to date, silver surged over 158% in the year 2025. So yes, it's true. Up until this point in 2025, if you would have invested into silver in January instead of anything else, including gold, including stocks in the S&P 500, big tech, small tech, it doesn't matter, and even cryptocurrency, the highest yielding asset right now has been precious metals, specifically silver being the one that is an outlier. But let's look at something else that's going on. So if you look at the Kobesi letter, they had this really good article, basically an article or a thread over on X that they posted. And they said and called it the silver situation. And I will formulate my own opinion based off of all the data and things that I read collectively. Silver price is now up 175% in 2025, set to an 8-month win streak for the first time since 1980. And remember, retail euphoria tends to be fueled by green candles. When they see a chart that is setting up a very bullish setup, people chase the pump and run after it, and unfortunately oftentimes buy local tops. And that's why I'm saying watch this video before Monday, because can you justify that right now silver is at all-time highs? Gold and silver together have added a combined 16 trillion in market cap just in 2025 alone. So what's happening? And they gave a really good breakdown and explanation aside from looking at the chart. Look at that rally from, this is looking at the yearly chart, absolute blow off top for silver. So as you may know, the view from Kobesi letter and a lot of investors and analysts that forecast markets have been own assets or be left behind. This year, just about all assets have pushed even higher, except of course, again, mainly just the crypto space. But if we look at the S&P 500, gold and silver on massive runs. But as of late, gold and silver have been leading the charge, now up 4 to 8 times as much as the S&P 500 year to date. It all started with the weakness or the weaker US dollar. The US dollar is now currently down -9% if you look at DXY or the dollar index, on track for its worst year since 2017. As rate cuts kicked off, the US dollar saw further weakness. We know when there's quantitative tightening macro structure and a non rate cut nature, we see the US dollar outperform a lot of different assets because that's what happens collectively with bonds. So I'm sure a lot of you are familiar with bonds, but if you're not, I would educate yourself on what they do and how they work because they usually are an inverse of what happens in the general equities market or even precious metal market. As President Trump's new Fed chair is set to be announced, markets are pricing in even more dovish Fed policy, meaning more quantitative easing from a macro sense. And you can see here that the dollar is down from the beginning of 2025 by 8.7%. Donald Trump mentioned when he first took office for his executive order announcements, he said before he even enacted his tariffs that he needs the dollar to go down because ultimately dollar goes down, other risk on assets go up. There's an inverse relationship between the two. On December 12th, President Trump asked where he wants interest rates to be with the new Fed chair. His response was 1% and maybe even lower than that. If the federal funds rate drops to 1% or below, folks, we're talking mega giga bullish for both the stock market, equity market, and of course, even other things like precious metals as such of silver. Silver prices are now up 41% on the month, on track for the best month since 1979. December 1979, guys. Bond markets are even more telling. You can see here since September 2024, when the Feds began cutting rates, bonds have failed to rally. Why? Because of long-term inflation expectations remaining elevated. This cemented gold and silver as the global safe havens. Meanwhile, central banks around the globe are buying unprecedented amounts of gold. Between 2022 and 2023, Goldman Sachs saw a five-fold increase in central bank purchases of these precious metals. In Q3 2025, China's central bank gold purchases were 118 tons, up 39% month over month, 55% year over year. Could it be because of the tensions, global geopolitical tensions that are building up also in Taiwan, in the Middle East, US Venezuela, US Russia? Too many things. Ukraine, Russia. There's a lot of, again, tension that's causing uneasiness from an economics perspective of who is going to be the true global leader when it comes to economies. So the one thing that we know time and time again, and history always repeats itself in this sense, is, as of a fact, precious metals are and have been able to outperform and always have been the gold standard or silver standard, if you will, for the economy. Now they go on and talk about what's even more interesting with China hiding these purchases. China purchased 15 tons or more tons of gold in September, or 10x more than the officially reported according to Goldman Sachs. Year to date, China reported gold purchases of 24 tons, but are actually likely closer to 240 tons, exponentially more than they shared. Now China's adding even more fuel to the fire. Beginning January 1st, they implement new exports controls requiring government licenses for all silver exports. We saw that Elon Musk even commented in saying silver is highly used in a lot of even tech sector technology, right? So is gold, we know it is, for power supplies and many other things as a metalloid or metal. As a result, Shanghai silver prices up $85 an ounce, making a $5 ounce premium to spot here in the United States. This due diligence, I think, is excellent for people to read through, and I'll put the link down below for Kobesi letter because they did a really good job breaking down everything for this form of due diligence. As sentiment spreads, we are seeing record inflows into these assets. Gold funds just saw $34 billion of net inflows in the last 10 weeks, the most ever recorded. Money's flooding into precious metals at an unprecedented pace, and now everyone is wondering about crypto. While precious metals have seen historic runs, Bitcoin is down 6% year to date. After rising as much as 40% year to date in October, Bitcoin and the broader crypto market did collapse as people became a little bit more risk off. So whether we like it or not, or if you don't have this understanding, precious metals in general are a risk off asset. When there's geopolitical tensions, when there's uncertainty in markets, uncertainty in the economy, Because remember, a lot of investors right now still do believe, regardless of GDP data coming out, a lot more positive and stronger than expected, CPI and PPI data coming out, which is all macroeconomic data being released that's a lot better than expectations. What people are feeling at home is the sense of recession. And when recessions happen, we know what occurs with the dollar. We know what occurs with risk on assets. They tend to begin deflating and dropping in price. So as we look into 2026, we think capital markets will become even more tradable. The macroeconomy is shifting and stocks, commodities, bonds, and crypto are moving. So the most important thing to make sure you understand is what is retail betting on versus what are institutions betting on. And this is the first time in a long time where we're seeing them go literally hand in hand. 57% of retail investors expect silver to trade above $100 an ounce in 2026. Experts see further gains but warn for downside risk. What are banks telling us? So let's look at institutional side of things. Analysts and firms. Bank of America, their target for 2026, $65 an ounce. So right now you're still buying in a premium from a BOA or Bank of America perspective. Citigroup, $70, $72. Saxo Bank is looking at $60 to $70. JP Morgan Chase at $58. Peter Krotz, $7 an ounce. Allen Hibbard, $100 an ounce. So basically the reason that I even made this video is a lot of you are looking at this chart right now and saying, oh my goodness, I need silver. I need it now. But understand that oftentimes when we see these kind of unprecedented runs, yes, there's a lot of data from a macro and micro economics perspective that tells us maybe it is an attractive time to buy precious metals. I think right now you are buying in at a premium from a lot of analyst forecasts. If you're looking to be a long-term holder of silver, I'm talking decades down the line, you're someone like myself, maybe you're in your 20s, maybe you're in your 30s, even 40s, but you're looking for long-term holds, be ready to stomach downside volatility before you're going to see true gains or ROI for your metals. So with that being said, am I a bear? Absolutely not. Am I a bull? 100% long term. But short term, I think you might be able to get away with holding off buying for the next few weeks and even months till we get better economic data. And once we know the direction that the Federal Reserve is going, there might be a lot of other assets that have much more upside because sure, silver could potentially go to $100, $150 next year, but there's probably going to be more opportunities out there for markets that have not ran already parabolic. Because remember, silver just this year alone is up an insane almost 175% year to date. I'm talking just from 2024, it was $20 an ounce. So you're buying in at a 4x premium over a 2-year period. So be careful. That's all I'm here to say. I'm just here to share my personal sentiment and also just looking at the global markets and what they're telling us from a numbers perspective. So again, shout out to every one of you that have already subscribed to the channel. We're over 80 subs now. I'm really excited about this channel where I kind of talk about things that I personally have been watching, aside from just talking cryptocurrency on my other channel, the Europop channel. Now I have a space to talk about general markets and also discuss different things alike. So I appreciate your support as always, guys. But that's all I have for you today. I hope this due diligence helps. You make your own decisions as always. You're your own financial expert. These are just opinions that you could find on the internet, and I hope you find them helpful. So until next time, as always, everybody, keep investing. Peace.